Today is April 29th, 2015. I need to get my disclaimer. I am not a licensed financial planner, nor am I a licensed stock or bond broker or a security dealer in any fashion. I am a licensed real estate agent broker here in the state of Arizona. Have been for since 1982. I've been here for a long, long time, and I'm reasonably well versed in most financial assets, having doing a lot of investment commercial work, and knowing what it returns and different asset classes. And I have, for the last 4 or 5 months, been making a strong case that one needs to start looking at the portfolio and develop an exit strategy from your bond and stock portfolio and take some profits. We did this in 2006. I called my investors, said I think the market is direction is down, and I think that we need to start taking profits. We took profits. I notified all my investors. A lot of them didn't believe me. But they did later on, and I was right. And the problem I personally have I've taken my profits. I've taken a lot of properties that I've owned for a long time. I've brought them right down to my strategic real estate. Those properties I think are absolutely terrific. I intend to keep through thick and thin. They cash flow day in, day out, month after month. They're very good properties, very good, well located. And those are my strategic core properties. I've sold anything that was a marginal property is gone. I'm recommending that if you are in the stock and bond market that you had profits, that I think that you should do the same thing that I have done and take some profits. I'd take a third off the market. In 2006, we didn't take enough. I should have taken more. So I think that to be prudent, I think that you've had these profits, that you may want to start thinking of a different asset class. Now, and this will become apparent in just a second. Today, the GNP numbers came out, and they were forecast. Some said 0. I think the Atlanta Fed said it was really going to be slow, but a lot of Wall Street economists said it was going to be 1.2 on the low to 2.4 on the high. And of course, fourth quarter of 2014, we ended the year at 2.4% GDP. That was a pretty good increase, nice growth factor. But it came out today, and it was 0.2%, well off everybody's expectations. That's why the market dropped so radically this morning. I went down 150. It's not radical, but 150 points. And quite honestly, there was probably a historic buildup in inventory, $121.8 billion, historical. Never been that high of an inventory buildup in the history. Had we not had that big of a buildup, would have been significantly negative. I saw estimates of 2.6% negative. So that means that we continue to make bicycle parts and swing sets and gate posts and automobiles and car parts and furniture, and nobody's buying them. So that means that eventually it will stop. Employment will slow, and you'll have a glut of things on the market, and eventually if the economy doesn't pick up, and there seems to be a trend here that keeps getting softer and softer. You just look around the globe. I don't know how we can have a robust economy when you have unemployment across Europe in the 20s and youth unemployment in the 50s. So we do export things, and of course we're a global economy. So I think things are going to slow down a little bit, and just be prudent. Just be prudent. I think you should consider taking some money off the stock out of your portfolio and set it aside. Now here's what saved us during the downturn is we had cash flow coming in. I had cash flow coming in each and every month, dependable cash flow. I had some problems with some tenants. Of course, they lose their jobs and they have trouble, and we have to adjust our portfolio accordingly to that. But the vast amount of income just kept coming in. Now, as the economy softened, we went down maybe 10 or 15%, but that was all. We just went down 10, 15, and that was the bottom. And what we found out was taxes slowed down, our maintenance went down, insurance went down, our turnover went down. So we had mitigating factors, and even though the rent rolls went down 10 or 15%, we saved another 5 to 8% on our expenses. So it was a very good mitigating factor, and I kept having cash come in each and every month. We had cash. Now, if we have a problem, you are going to want to have a cash flow. Where are you going to go to get a significant cash flow? I think that in 2018, 2019, 2020, I believe in my heart that there's going to be one of the greatest bull markets in real estate we've ever had. So I think this is strictly a correction in the bull market. We've already had the historic crash 4, 5, 6, 7. Oh gosh, it's been 8 years ago. So I don't think that's going to happen again. We could correct, but we are looking for a bull market. So I think that anything that you get now is a buying opportunity, and financing is terrific. So yes, maybe you buy a property for 100, and maybe it goes down to 85 or 90 within 2 or 3 years. Your financing will be in place, and I'm looking to hold these properties 5, 10, 15, 20 years. I mean, I have properties I've owned for 30 years. They still cash flow. They still provide me an income. They're still growing and appreciating. So why would you sell those? So I would advocate that you buy a couple of those and then get some income. Now just think, if you had 5 or 6 or 7 properties that you bought, each one generating $700,000, $800,000, $900,000 a month, you could easily have $4,000 to $5,000 to $6,000 a month coming in right through a bad economy. So I would advocate that you do that. We call that strategic real estate. Really good properties that you're going to keep for a very, very long time, and they will be a lifeboat to you. It's going to be that cash flow that's going to make a significant difference, that that when you go out to the mailbox once a month, there's a check there sitting for you, and you're going to be able to spend it. So rather than spending your nest egg, you're going to have some kind of income coming in, a nice return coming in off of your investments. Now, I know that yield is really a problem for most, and I know that they build at 4% is what what a lot of financial advisors say. Well, if you have a nest egg of $400,000, you can take 4% a year. Well, that's $16,000. So if you can get a higher return, why then you're better off. So the idea, of course, is to not to use your nest egg, is to use the return off the nest egg and live off that income. So everyone that I know should be getting some kind of a Social Security when they're 62. Better off, I think, waiting till you get full retirement. In my case, it's 66. But let's just think about income. Now, there are those that do not want to do this themselves, and I recognize that. It's pretty easy. We're talking about buying some very, very good properties, right, that you're going to want, and we're not talking about exotic things. We're talking about 3-bedroom, 4-bedroom family homes, so you're going to know how to paint them and clean them, and if the roof goes bad, what to do with that, and if the faucet needs to be replaced, you're going to be able to do that. This isn't anything that's so terribly difficult. But if that is not your cup of tea and you don't want to do anything, I do have private placement offerings, and they're 6 to 8% passive income. It's pretty doggone good, and they're really good properties. They're professionally managed. They're professionally bought, so they're pardon me. So these are properties that you're going to want to keep for a very long time. We have a little bit of that. I don't have too many private placement opportunities, but they do cash flow 6 to 8%. So if you do have some interest in that, you do have to be a qualified investor. So you're welcome to call me, and we can discuss and see if that's appropriate for you or not. If not, I'll be more than happy. You don't necessarily have to be here in Phoenix. I mean, Phoenix, we have tremendous opportunities for growth. I mean, I think that Forbes said we're the number 1 and number 2 growth economy in the nation for the next decade, behind Houston. And Houston's having its problems with the oil patch, so maybe we're going to go up to number 1. So the growth here is phenomenal. I've seen we have 4.5 million people here in the valley, and I've seen estimates that we might have 7.5 million in 10 years, which would be significant. I mean, that'd be going up 50, 60, 70% population. Even if we only got an extra million, or a population of 25%, it would be phenomenal. So opportunities are certainly here, but probably in your hometown as well. So I'm going to put my phone number. Pardon me for I've got allergies here. Everything's in bloom. Desert looks absolutely stunningly beautiful, but it is blooming, and I do have allergies, so I apologize for that. If you have any kind of questions, you're welcome to call me, and I'll put my contact information at the end. And please send me some of your thoughts and your questions, and I'll be more than happy to answer that. So this is my very best to you. Bye-bye now.